Good late afternoon and thanks for joining us. I'm Sage. You're watching 𝐊𝐴LKIND TV live from Sydney. And this is the last show of the day, the last trade. And there's no better way to wind down the day than with today's market close commentary. And in today's show, we'll look at the overall ASX 200's performance of the day and also explore the gainers and the losers. And this would be followed by the shares that grabbed the limelight today, such as Zip, Sonic Healthcare, AusNet Services and many more. Then I'll share the trending updates from the Asian markets in the last segment, along with a special report on cryptocurrencies. So let's dive straight in. And the Australian shares have rallied considerably on news that Evergrande has reached a deal with bond holders. The ASX 200 opened 0.1% lower today, but changed course by lunchtime to post gains of 0.4%. Finally, the Australian shares closed higher, with the ASX 200 gaining 0.39% after setting a new 50-day low, and 7 of 11 sectors ended higher, along with the ASX 200's index. While the financials, industrial and IT sectors were in the red zone today, energy was the best performing sector, gaining 2.42% and 0.83% for the past 5 days. Let's now take a look at the top gainers and losers of the day. And the top performer on the ASX pack was metals and electronics recycling company Sims, which jumped 6.68%. Champion Iron traded up by 5.67%. Worley's shares surged 5.66%. And Beach Energy was up as well, 5.35%. Zip was amongst the top gainers after the fintech company announced its strategic move to India via investment in Zest Money. On the flip side, Premier Investments topped the losers chart by falling 4.35%, and some of the other top laggards were the ASX companies Link Administration, AusNet Services, Insurance Australia Group and IPH. IAG's Chief Risk Officer David Watts has resigned from the company as per a market update that came yesterday. Now let's shift our lens to the stocks that grabbed investors' attention today. And the first update is a strategic market update from the second largest ASX listed buy now, pay later player Zip. Place the stock in the green zone today as it is trading up by approximately 3% at $6.41 Australian. Zip has planned to enter the highly potential BNPL market in India. It has agreed to make a strategic investment in Zest Money, which is a leading Indian BNPL operator. And next up, shares of one of the big four banks, Westpac Banking Corporation, declined by nearly 1% after the bank announced that Kina Securities and Westpac have agreed to terminate the agreements for the sale of Westpac's Pacific businesses. And the termination follows last week's decision by Papua New Guinea's Independent Consumer and Competition Commission to deny authorisation for the proposed acquisition. Let's move on to the next now. The Global Fund Manager will launch its flagship environmental, social and governance fund with a 3-decade track record in Australia to meet the growing demand for sustainable investing. And the portfolio is aiming to convert the global push among businesses to carbonise or decarbonise into investment returns. And the global leader in transfer agency Computershare saw a decline in its stock price by approximately 1% after announcing that its founder, Mr. Chris Morris, will not be standing for re-election at the 2021 AGM. And meanwhile, John Nendick has been appointed to the company's board as an independent non-executive director. And we'll take a small break, but stay tuned with me as I'll be back with more trending market updates. Hi, I'm Sage, and get ready to take the crypto ride with me on 𝐊𝐿KIND TV. Watch the Crypto Buzz every Tuesday and join the excitement at 𝐊𝐿KIND TV. From Bitcoins to NFTs to Dogecoin and DeFi, we have updates about everything around these digital currencies. Understand the investing rationale and the risks involved in the space with me, Sage, on Crypto Buzz. Keep watching 𝐊𝐿KIND TV. Welcome back, Sage here with the market close commentary by 𝐊𝐿KIND TV, and let us take a look at some of the stocks grabbing the investors' attention today. And shares in the energy provider AGL have jumped 2.5% after the company confirmed ahead of its AGM it had avoided a second strike against its remuneration report. In an address before the 2021 annual general meeting, Chairman Peter Botten said the business had avoided a second protest vote from shareholders on pay. And meanwhile, AusNet shares have fallen as investors digest a second takeover bid from APA Group. An APA, a gas pipeline worth $10 billion, lobbed a $9.96 billion takeover offer for AusNet to compete with a $9.6 billion offer from Canadian infrastructure giant Brookfield. However, APA failed to bring AusNet to the table. And next up, rapid diagnostics business Lumos saw its shares drop more than 10% today. The company has suffered setbacks in the US with the Food and Drug Administration stopping its review of its rapid antigen COVID-19 test. It had applied for emergency use authorization for the test in the United States, but the medicine regulator had deprioritised and then ceased review of the company's application. And lastly, small cap fintech Doof saw its shares plummet by 5%. The company is heading to the US and wants to list on the OTCBQ venture market. The index features 11,000 US and international stocks and attracts smaller tech companies wanting to build momentum in the United States. And let's now move on to the next segment, where we take a look east towards the Asian markets' performance. Equities in Asia and Europe rebounded, with the Hang Seng rising 0.5% and Euro Stoxx 50 up 1.3%, while Wall Street failed to hold on to its initial bounce. Japan's Nikkei fell 0.5%. Equity, bond and currency markets in China opened for the first time today since concerns over Evergrande's predicament triggered a wave of selling and contagion worries around the world. Singapore traded FTSE China futures are about 2% below Friday's closing level. Safe haven assets such as the yen and US Treasuries rose slightly in the morning trade. Overnight on Wall Street, the S&P 500 fell 0.1% to sit a little more than 4% below a record peak it made earlier in the month. S&P 500 futures fell 0.4% and the offshore yuan was under pressure near a one-month low at 6.4850 per dollar. Market sentiments remained fragile ahead of the hotly anticipated Federal Reserve policy statement, and Evergrande's interest payments on two bonds worth $119.5 million that are due tomorrow. However, the global markets appear to have settled from the panic that characterised Monday's trade, but sentiment remains fragile ahead of the Federal Open Market Committee tomorrow morning. And we've reached the last segment of this show. Let's have a quick look at the crypto markets performance. Bitcoin continued to struggle after Monday's sell-off, although the cryptocurrency appears to be stabilising at just above $40,000 support levels. The digital coin is down 3% over the past 24 hours, and analysts expect the pullback to come close to an end, hopefully later this week. Volatility could remain elevated this week, with the US Federal Reserve policy meeting concluding today and the quarter-end Bitcoin options expiry on Friday. And over the long term, however, experts suggest that Bitcoin's uptrend remains intact. A broader pause in assets deemed to be risky, such as equities, commodities and cryptocurrencies, have prohibited alternative coins from regaining leadership for now. And thanks for joining us, folks. That's a wrap, and hope you found the market closing commentary informative. We'll be back tomorrow live from Sydney as close as possible to 9:30 in the morning with our first report on the pre-market scenario. Take care, stay safe. Sage signing off.